We are going to proceed with the guidelines, and this session may not cover all the programs. With that being said, we're going to focus on, right now, we're going to be looking at a couple of our programs that we've had for a while, and they're the 5000 INV and the 5000 INV DTI. And basically, if you look at those programs, there have been some adjustment and changes to those and improvements, actually. So this product, let's start with the 5000 INV. It's extremely unique that we can offer a program like this. And what you're talking about under the INV program is essentially a program requiring no income from the borrower, no employment, and in the case of a purchase transaction, verification of enough funds to close. No reserve requirements, so on and so forth. We do require the employment information on the 1003, but that information is not verified. It's strictly there for purposes of servicing, should there be any questions or follow-up regarding payments and as such. So there is no income at all on the 1003 at all. And the employment information is not used for any kind of verification. It's not part of our quality control or anything like that. With that being said, a couple of requirements for this program. If you look at page 1 of 10, you will actually find that the highlighted areas identify, again, changes in guidelines and programs. And originally, our program was limited to 640 FICO score, but it was a drop on a purchase LTV to 70%. It's actually been increased to 75%. So borrowers with a 640 FICO score are able to get up to the 75%. There is a requirement on this program that a borrower owns their primary residence. The reason for that is that we want to make sure that these no-doc programs effectively, which is what this is not used as a method for borrowers to buy their primary residence homes. So what we're looking for in this program is to ensure that the borrower has another primary residence and that this property is in fact verified to be an investment property. It's really, as I mentioned on prior sessions, ATR compliance related issues pertain to primary and second homes. They don't pertain to investment properties. That's why we have a lot more flexibility and less documentation and requirement on this program. However, we have a duty as a lender to make sure that the borrower is not in fact looking to occupy the property as a primary residence. The requirement of ownership of their primary residence does not require them to necessarily have a loan on their primary residence. In other words, they could own their primary residence free and clear and still qualify for this program. There is an element that you have to consider on this investment program, that you do have a 5% LTV reduction for an investor buying for the first time. So if they own their primary residence, as we require in guidelines, and they have not owned an investment property in the last 12 months, they would not qualify for 75 LTV. They would actually have to take a 5% reduction. Now, what do we mean that they have to be an experienced investor, or the term first-time investor in this case? What we're talking about is essentially a borrower that has owned an investment property in the last 12 months. At the time of the transaction that we're working on, the borrower doesn't necessarily need to own an investment property, but has to demonstrate that they have had an investment property that may have even been sold in the last 12 months. So the program requires someone to achieve max loan to value. The program requires a borrower to have that investor experience to get to the 75 LTV. At the time, again, of the transaction that we're working on, the borrower does not necessarily need to own a property, but we will need and ask for documentation if they claim that they are not a first-time investor and in fact have owned prior properties that may have been disposed of in the last 12 months. We will ask for documentation to support the experienced investor. Otherwise, we will have to hit them with a 5% LTV reduction. You will see some variations on the bottom, and in this case, an important one is that we're going to 75% LTV on condos on this program. In addition, it's important to understand that this program has a foreign national variation that will allow an experienced investor to go up to 70 LTV, a foreign national borrower with no FICO score. So if, again, and a foreign national borrower is an experienced investor, they will get 70%. If they are a first-time investor, they're going to get 70 minus the 5% LTV reduction, so they will be at 65 LTV if that is their first purchase. The issue that we talked about earlier with regards to owning a primary residence does not apply to foreign national borrowers, very simply because they're foreign national borrowers, and the current property that we may be working on financing cannot be a primary residence for a foreign national borrower. So we're not concerned about foreign national borrowers owning their primary residence. We will require verification of mortgage via the international credit report or some sort of verification of their primary residence and any other properties that they own. We do not require a FICO score for foreign national borrowers. However, we do run a U.S. credit report, and if in fact there are foreign national borrowers that have established credit in the United States, and they do in fact have FICO scores, we have to use the FICO score. So again, foreign national borrowers don't need to have U.S. credit, but if they do, it takes precedence with regards to the program. So foreign national borrowers generally do not have FICO scores. With that said, a couple of important elements to understand regarding the foreign national program. You do need to make sure that foreign national borrowers are not from countries that are on the OFAC list. Those are high-risk countries or countries that have issues with regards to doing business with the United States or U.S. doing business with members or citizens in those countries. On page 6 of 10, you will find foreign national borrower eligibility. There are some details on the credit matrix on that on the same page. And moving on, we do have some flexibility also regarding non-warrantable condos. And in this case, this program does allow up to 75% as identified on page 9 of 10. Again, just like our other programs, the minimum loan amount on this program is $150,000. Consideration of exception down to $100,000 on a case-by-case basis, and that does not mean that is automatically granted. It's on a case-by-case basis in that respect. So with that being said, let's move on here. We will go on to the next program. The similar program is on program 5000 INV DTI. The essential difference is there's some flexibility on this program by adding some additional qualification to the program. So in a case where there is documentation, lease and rental income can be used from a qualification standpoint for calculating debt to income, this program will go down, this INV DTI will go down to 620 FICO score, while the regular INV requires a minimum of 640 FICO score. The DTI that we reference is not the traditional DTI that we use from borrower's personal income, but more so, it's the rental income relative to the mortgage or debt service on the property. To calculate the debt service, you're essentially looking at the PITI on that loan, and there's a calculation of that relative to the rental income. In the case of a property that has a refinance, we will take the lower of the rental survey done by the appraiser or the lease, whichever is lower, to calculate this DTI. You will find that we have actually increased the DTI calculation to 90% as long as the borrower has as a minimum 640 FICO score, and then the DTI drops to 70%, going down to 620 FICO score. In addition to that, this program has reserve requirements. However, depending on the LTV, as you will see on the matrix on this, you will actually find that depending on a LTV reduction, reserves can be waived by slight reduction in the LTV. So reaching the max LTV at each level will require 6 months minimum reserves, while 620 to 639 FICO will always require 12 months reserves based on the FICO score. So those are some things to be aware of. In addition to that, you'll find on the INV DTI, just like the other programs, we have reduced the requirement for a second appraisal. As such, previously we were asking for second appraisal to be at loan amounts of $1 million and above, and that is going to be increased to $1.5 million on both the INV and the INV DTI. There's also another advantage on the INV DTI, which is there's pricing improvement. Since the property is effectively qualifying utilizing the rental income of the property and a sort of a debt service coverage, if you're familiar with debt service coverage, that's a term used typically on commercial properties. The DTI is used to qualify. There is an improvement in pricing. So that's one of the benefits of using the INV DTI compared to the regular INV program. The DTI calculation, the ratio, is identified on page 6 of 10 on the guidelines. And again, just like the other programs, the minimum loan amount is $150,000. With that being said, we're going to move forward on addressing an alternative program relative to this and jumping to program 5000 FN. So actually the INV, the 5000 INV has a sub-program 5000 INV Foreign National, which has no income requirements. But we have alternatively another Foreign National program that's essentially a full documentation loan based on the borrower's income from of the country of origin. That's the 5000 FN. So it's important not to mix up these two. One is 5000 INV FN, which is an investment property only. There is no income documentation in the file. And then there's a 5000 FN, which is essentially a full foreign national loan based on the borrower's income at the country of origin. There's a reason why the 5000 FN is used. Again, the benefits for the borrower are improved pricing because there's additional documentation and income that they're providing. It is a bit cumbersome depending on the borrowers and their specific circumstances or employment at country of origin. Both foreign national programs require a mandatory international credit report that costs $250. In addition, depending on the country of origin, we will still require the borrower to provide us a credit report from their country of origin that provides trade line details. The reason that we need the trade line details are that the international credit report that's provided is a one-page summary, and it does not provide any of the trade line names or details. So some countries also have the use of TransUnion, Equifax, and common countries that have that, for example, would be the UK. The borrower themselves can go online and pull down an Experian report, then we use that. In the absence of the borrower being able to provide that and being in a country that has that kind of report, you should reference the credit section in both the 5000 FN as well as the 5000 INV FN. And you will find there's some requirements for trade line letters that are required. For example, you will find credit reference letters must be from an internationally known financial institution. Each letter of reference must state the type of length of relationship, how the account is held, payment, amount, outstanding balance, and essentially those details are found in the case of Program 5000 FN. They're found on page 5 of 9. So it's important to understand that we will require both the international credit report and the other report that the borrower can themselves obtain depending on their country that provides the trade line details, or if there is no credit reporting agency like Equifax or Experian in their country, depending on the country they're located, they will have to obtain the necessary trade line reference letters from financial institutions to be coupled with the international credit report. It's important to realize that. Again, these programs are meant to help provide improved pricing, and the 5000 FN pricing is more competitive than the 5000 INV FN in that respect. In addition to that, the 5000 FN allows a borrower to buy a property as a second home or an investment property. There are many borrowers that are buying these properties in a capacity of a second home. So that does provide some flexibility for them. In addition to that, loan amount limitations are higher on the 5000 FN being a full documentation loan compared to the 5000 INV FN. So please review the matrices and compare them. Alternatively, this program as well does allow the use of one appraisal up to the $1.5 million. At this point, as I've identified previously, that's that has taken place as of these new guidelines. We're now going to jump ahead to the program 5000 ITIN, which is the program for financing undocumented borrowers. And essentially what you have is you have max loan amount on this program up to $600,000 at 60 LTV and 90% up to $300,000. There are reserve requirements. Please look on the guidelines. Again, minimum $150,000 loan amount. Credit report is required. It's important to note that what these borrowers are, and it's important to understand the differentiation between the foreign national borrower and ITIN borrowers. Foreign national borrowers are individuals who do not reside in the United States. They also have ITIN numbers in many cases because they have obtained them. If they own properties here for reporting purposes, they do obtain ITIN numbers. The 5000 ITIN program is not a foreign national borrower, and these programs should not be confused. A 5000 ITIN program is for the borrower that resides in the United States and intends to occupy the property or is already occupying the property as a primary residence. The ITIN program is only available for purchase, rate, or term, primary residence only, and it's not meant for second home or investment properties whatsoever. It's important to understand differentiation because many people make that mistake and they presume that the ITIN program could be essentially a foreign national program. It's important to understand as well that we will allow up to 90% financing. However, up to 75% borrower can have non-traditional credit. In other words, the credit report may not be reporting much or any trade lines, which would effectively mean no FICO score. 75% and higher would require the use of traditional trade lines, which affect the FICO score. So most borrowers that are ITIN borrowers, generally speaking, are not likely to have many traditional trade lines. And you can look in the credit section as well that provides and identifies all of this information. In regards to, again, differentiating the differences between a 5000 ITIN and a 5000 FN program, it's important to understand that these ITIN borrowers, our 5000 ITIN borrowers, as I indicated, are undocumented borrowers living in the United States. These are basically individuals that have entered the country without necessary legal documents, or they entered the country and their legal documents expired. However, they have obtained ITIN numbers going to the IRS website, and they have filed tax returns for a minimum of 2 years. As such, we're treating them just like regular full documentation loans, and we will obtain transcripts to make sure that the income matches. We are also sensitive to the fact that many of these ITIN borrowers, with regards to the credit report and or tax returns, may have for example, in the case of tax returns, may have W-2s that have a variation of their name, but they've used social security numbers that may belong to someone else. There is an understanding flexibility with these borrowers, and we see that also on the variation on the credit report. However, we will want to make sure that we do get a letter of explanation from the borrower and match that up. Simply put, the idea and the understanding is that these are individuals living in this country, undocumented. However, they're taxpayers and they have tax returns that evidence their income to qualify. So this is the 5,000 ITIN program is a full doc loan for a borrower that is working and living in the United States only. It is not a foreign national borrower. It's important to understand this differentiation, again, because the ITIN represents a tax ID number that can be obtained by both someone living abroad as well as someone living in the United States. So please be careful when using that terminology. There are specific characteristics as far as requirements, as I indicated earlier, such as reserves post-closing. And again, these programs are, this I-5000 ITIN program is available on both purchase, rate, and term. Again, primary residence only. With that being said, I'm going to jump to the next program, which is the 5,000 one-year program. This program is designed for self-employed borrowers only and utilizing 1 year tax returns. Most generally, we will require that the tax returns that are being used are for the most recent tax filing period. Any use of prior tax returns will require an exception. So at this point, especially at this time of the year, since extensions have almost ended, at this point, to qualify for the 5,000 one-year program, borrower would need to utilize 2016 tax returns to qualify. Generally, borrowers that use the one-year tax return program are using them because they may have had negative effect on the prior year, and doing an average for 2 years would disqualify them in obtaining a loan. So the use of the one-year tax return allows the most recent year to be used. We will require, as part of the requirement for this, the P&L from the borrower for the current year to be consistent with the 1 year income documentation, the tax return that's been submitted. You will find details of that on page 5 of 8, and it's highlighted in yellow. We do not require the P&L to be prepared by an accountant, so it's a borrower-prepared P&L that's provided. In addition to that, underwriting will require, based on the time of year, will require the P&L to be supported with 3 to 6 month business bank statements so that there's consistency. It's important to understand that the P&L income cannot be substantially higher percentage-wise than the tax return that's provided. Many people use this program to take the one-year tax return, couple that with a P&L, and now suddenly they think with that they can actually increase the borrower's income to qualify. We want to qualify the borrower based on the one-year tax return. The P&L is just to show consistency of that same income. So the use of the P&L is not meant to average the income and bring that income up based on substantial increases on the P&L. So if you have a certain income in the one-year tax return and then you have substantially higher income on the P&L is not going to give the borrower a boost in improving income and improving the DTI calculation. Again, bank statements are also required just to make sure that the P&L provided and the income on the P&L is consistent for 3 to 6 months to identify that the P&L is accurate and legitimate. There are some characteristics that you need to be aware of with regards to payment shock on page 6 of 8, the use of non-occupant co-borrowers, certain LTV limitations. Please review and pay attention to that on that program, and it's important to recognize that on the 5,000 one-year program, have a minimum FICO score of 620 that is identifying some LTV limitations. Loan amounts are capped at $2 million on the 5,000 one-year program. With that, we're going to jump to the 5,000 Elite. We had previously discussed and reviewed the Elite program for the 12-month bank statement and the 24-month bank statement. This program is, again, the Elite provides a solution for A-plus borrowers, A-plus credit profile borrowers. The bank statement program minimum FICO score is 700, while the full doc program is 680 minimum FICO score. Naturally, the higher the FICO score, the better the pricing, as well as understanding that the bank statement program has a 70% LTV cap, while the Elite full doc program has an 85 LTV cap, as you will find on page 112 on the matrix. Again, minimum loan amount on this program is $150,000. As you'll find that there is a non-owner occupied feature available on the full doc program, making this program extremely competitive, very well priced. So it's owner occupied, second home, as well as non-owner, and there is cash out available on this program. As identified previously, two elements, again, the minimum $150,000 loan, as well as the fact that only one appraisal is required up to $1.5 million loan amount. Anything above that will require two appraisals. The credit profile on this is much like the Elite bank statement programs, where you have a requirement for the borrowers to have essentially, as you'll find on page 4 of 12, you will find that there is a 5-year requirement for BK, foreclosure, and short sale. I do want to provide some clarification on this again, that this program has a minimum on the full doc, a 680 FICO score, while the bank statement program has a minimum 700 FICO score. So full doc has 20 points more flexibility simply due to the fact that it's obviously a full doc program and you've got income documentation to support that. Naturally, you're going to have an A-plus borrower with 0 times 30 mortgage rates in the last 12 months. So with that being said, we're going to jump to the next program, and that's going to be the program 5000 NP. The 5000 NP has had some changes across the board. If you look at page 1 of 9 on the NP program, there have been some enhancements in LTV. Some you're going to find dramatic rate improvements on this program. However, the seasoning requirement on this program has changed to require a minimum 2 years for bankruptcy seasoning and 2 years for a housing event, where previously it allowed for 12 months. So it went from 12 months to 24 months. However, the program increased in many areas, and you have expanded LTV and reduction in reserves. Please, again, take a look at page 1 of 9, and that will identify some of the changes as highlighted in yellow again. You have condos and multi-units, as you'll find that you can obtain 85% LTV as a result of some of these changes. In addition to that, you do have, on the new NP program, you do have an interest-only feature available, and there's limitations on borrowers that can obtain interest-only. So a borrower that has basically 1 times 30 in the last 12 months with a minimum of 620 on the NP program can obtain an IO loan, while previously that was not available. So you have some give and take on this program and some changes. And the big change to be aware of is that again, the 1-year seasoning for BK and housing event is now 2 years, but then you have many other benefits that have been rolled into this program, including an interest-only feature. Like I mentioned on previous training calls, you will find also that the IO features are moving into the 40-year amortization as opposed to a 30-year program allowing for a DTI improvement in that respect. Other changes in the program can be found again as cash out limits or percentage of the value. You will find that on page 4 of 9 as identified. You will find on page 5 of 9, you'll see the credit profile that we discussed, and the minimum FICO score on this NP program as part of the changes are also noted that you cannot get the NP program with any score less than 600. The previous NP program allowed for as low as 500 FICO score. The current NP program requires a minimum 600 FICO score. So please take a look at these guidelines. And as mentioned, there are reasons for the change, and there are improvements in the pricing on the NP program. And it's what really means to understand the change in the non-prime program is that our 5000 NP was previously more of a true non-prime program. And in this case, what we've done with the guideline change is enhance the guidelines, enhance the pricing, and made it a combination of, or a hybrid of a non-prime and a potential near-miss program, where it's not really 100% looked at as a non-prime program, and the profile of borrowers are not necessarily a non-prime classification. That's where the allowance for the interest only comes in. That's where the improvement or reduction in reserves come in. That's where the price improvement comes in. So there's a lot of benefits, and there's a reason strategically that the non-prime program has been adjusted in this manner to allow us to compete and provide solutions for a specific profile borrower that we have not had the right program for previously. As a result, you're going to have typically a lot more borrowers that may have previously been on the original non-prime program before this change. They're going to shift to the 5000 RH program. The 5000 RH is the next program we're going to be talking about, and the 5000 RH, just like the other programs, have had pricing improvements and enhancements. So a loan that may have been priced on the 5000 NP previously would now be falling into the 5000 RH category, and the pricing on RH has improved based on the characteristics to be in line or very similar to what was previously priced under the 5000 NP. So it's important to understand the combination of the 5000 NP and the RH and understand it's been adjusted. You will find on the 5000 RH program, there's some loan amount changes, there's improvements in reserves at different levels. Again, just like the other programs, you have a minimum 150,000 loan amount. The 5000 RH program is our flagship product under the heading 1 day out of foreclosure. So the 5000 RH represents our lowest classification of credit grade, going down to 500 FICO score with a max loan amount of $2 million. Again, adjustments have been made to this program also to not require a second appraisal unless you hit the $1.5 million and above loan amount. There are specific guidelines and limitations with regards to cash out on this program where there's actual dollar amount caps. Compared to other programs, it's important to always analyze the cash outs formula. As we discussed previously, several of our regular programs, cash out limits are based as a percentage of the overall value and not limited to a specific dollar amount. The RH program is capped with specific dollar amounts. Moving on to page 6 of 9, there are specific details and factors that have been clarified and provided under the housing event category that are important to read. Again, non-warrantable condos are available as well under this program, as you will find on page 7 of 9, with certain loan amount limitations. You will find some calculations and details with regards to DTI, very similar, slight changes to what we had previously. And again, just like other programs that have been identified, there are some items relating to tax liens Most borrowers in the NP and RH category are borrowers that have tax liens, and as discussed on other programs, we will look at tax liens with regards to calculation of the tax liens and potential ability to address them as they're in a repayment and there's a history, there's some sort of an agreement in place, and the CLTV calculation we'll discuss previously. It's important to understand how the tax liens affect the transaction on the RH and any other program that we have identified as being available for that category of borrower. With that said, I'm going to allow for a few minutes for any questions before we close. Please go to the GoToMeeting and go ahead and type in your questions, and I will be back in a few minutes to address and answer your questions.